Good morning, everyone. This is Nate G. It is 11:40 on the 7th. Is it the 7th? 7th of November, Tuesday. We're getting a little bit of a short squeeze push today on the indexes, which is kind of nice from a breaking out of this pattern perspective that we have been in. You see this channel we've been in on the Qs. We're breaking up and out. But I think a lot of people are trying to kind of short this level. So we're getting a little bit of a short squeeze, and we'll see if this becomes a trend day, or if we just kind of get a little poke out, maybe test this level here, and then roll back over. But the nice thing that we've seen here on both the Qs and the SPY is we were in this downward channel, and we've tested it a number of times on both ends. And we tested it, what was that, yesterday? Yeah, yesterday into the close Friday and open yesterday. And then kind of retraced a little bit and then pushed up today. So we are now kind of out of that channel and onto greener pastures, hopefully. So what could happen here, or what I would expect to see happen, is at some point we're going to find some resistance. We're probably going to come back and retest some of these major VP levels. You see this major VP level right here with my very crude drawings. We're probably going to come back and test that before a further move up. Obviously, we could come back and test that and break under it, and roll down. But I think we're moving out of this channel to the upside. And we're going to get into our Christmas rally coming up. So our seasonal Christmas rally. So what I want to do is a session here on risk reward, making sure that we have. Oh, I still have D-Man's pick on. Hold on a minute. I'll change that. Let's see. I'll just continue. Hold on a second. Hold on. You're going to like this. No, I'm not going to do that. All right, we'll do this for right now. We'll do that. All right, so now my pick's up. Just to remind him, he still needs his friends. He can't not need anybody. So what I want to do is I want to do this session from a TPS pattern perspective, because we all know and understand the TPS pattern. If you don't understand or need a quick refresher on what the edge, the TPS edge is, type of 5 in chat. This is Nate Bear's primary trading edge. If you need a refresher, please type a 5 in chat. Okay. So TPS stands for trend, pattern, squeeze. Okay. So for instance, we are looking for a stock that's in a trend, in an upward trend, as you can see from that, right? We're looking for a clear trend. We are looking for a pattern. Here's a fairly decent example of that. The pattern, the P stands for pattern, is a spike high, a pullback, a consolidation, right? A consolidation. So this is the pattern, a spike high, a pullback, a consolidation around the moving averages. And then the third thing we're looking for is a squeeze on the TTM squeeze indicator. And that's indicated by these red dots. So TPS stands for trend, the right kind of pattern, and a squeeze. And then we figure out what our entry points are and what our targets are. Okay? Is everybody clear on the trend, the TPS method? And these patterns get easier and easier to spot the more you do it. You know, this one's kind of starting to push up. It's not at a good entry spot at the moment. But if we were to, you know, just kind of back up the timeline a little bit, that starts to look really, really good. Okay. So that was, you know, probably into the close yesterday, somewhere, right? Now this is a spike high, pullback, consolidation. We call this the woodpecker pattern, right? So when we pick these up around the moving averages, and the idea is they continue along the trend and they go up and break this high, and profit targets are up here. Okay, so that's the trend pattern squeeze. Any questions on that? Yeah. And you're gonna, you know, these EMAs are stacked, right, to the upside. If you're in a trend, they're gonna be stacked. In some cases, like, you know, we can have, you know, they're starting to cross here, but you want to see them kind of level out. But stacked is much better. But if you're in a good trend, they're going to be stacked anyway. So what I want to do, what'd you find? What six did you find? Is that another question from somewhere else, Genesis? Yeah, so a woodpecker, you know, flag, a descending channel, they're all kind of similar and it kind of depends on how you want to draw them, right? You know, you could essentially draw this as, you know, this descending channel or descending flag, which will usually break up. On some of these other ones, you know, like on this, you could draw this pennant or flag pattern, right? But when I mean, then this is still, if we then, I should be using my pen, you know, this is still a woodpecker pattern like this, right? There's just also sometimes what becomes really nice is if you get a pullback and kind of a flat top, looks a little bit more like a woodpecker, but that's those are the patterns that we're looking for. So trend, pattern, and squeeze. Oh, Genesis, yeah, that meant that pattern. And so I really like a 30 minute to 78-minute squeeze are my favorites. Okay, so let's try to find some 30 minutes to 78-minute squeezes. I found a few today. They're all kind of pushing. So I found them this morning in anticipation of this session. And, you know, Visa was one, and it's kind of pushing up to the high. TMUS is another one, although that starts to look a tad bearish to me, and I can show you why in a second. Netflix was one, but it's pushing. Earlier today, it was down. It had done this pullback here, this red candle, right into a buy zone. I almost picked it up this morning into this buy zone, but I was busy trying to find these patterns, so I didn't. You know, Monster is in a good pattern here, TPS. So I kind of wanted to go through a bunch of these. DIA is no longer. It was this morning, and Nike was as well. And so what we can do is show what we would do to figure out risk reward on this kind of a trade. I've never used bar chart, Cal, so I don't know. Genesis, I'll probably on a 30-minute, I'll go, it depends. like let's say it's Wednesday and I find a good 30-minute chart that I can enter on a Wednesday. I'm going to go out the following week. But if it's a Monday, um, you know, I will sometimes go out that same week. Obviously, it's better to go further out, buys you more time, you don't get chewed up. But usually these 30-minute charts resolve themselves within, a day or two. Because otherwise it just starts turning into a 78-minute chart and then a 130. So that's kind of how I figured that out. So let's see if we can find, if anybody has any 30-minute charts that are currently setting up. TMUS looks pretty good. Let's see. I'm sorry, I'm over on we have Monster and TMUS. We can do those too. So Monster is, let me just look at the daily here. The only thing I don't love about Monster at the moment, MSTR at MicroStrategy, is that we're kind of coming up into this double top up here. But for example purposes, we're going to set this up as a trade and make a plan. And I also think, let's see, MSTR. I'm wondering if the options are crap as well. They're not great. So maybe it's not the best one to choose. But we'll use it because it's in a setup right now, right? And let's say we're going to play stock on it. Okay, so we're in our 30-minute chart. We have a trend. We have a pattern. Whoops. It's too expensive, I know. But it still will, it's in an overall trend, right? In here, it was in probably a 78-minute to a 130-minute squeeze that did exactly what we want it to. So if we're looking at trend pattern squeeze, let's do this. Let's go to a 78-minute, right? If we were to get rid of this piece right here, this will be a great example. Okay, here's MSTR. Oh, it had earnings. Never mind, that's not going to work. But here's a great 78-minute pattern. We have a trend, we have a pattern, we have a squeeze, and then when that plays itself out, boom, we're up to the high, right? So that's kind of the TPS pattern and how it works. So let's go to TMUS. The only thing that bugs me here about this, that makes me a little nervous at the moment, is that does anybody see what we're kind of setting up here on this? Does anybody see what might be setting up here? Yeah. We've got a little spike high. We've got a head. We're coming back up and forming more of a shoulder. So, that sort of pattern could mean a continued roll, right? It doesn't always. It just depends. But just being able to spot those patterns in the wild is important. But let's say we were going to, Nike's going to be the best one, and I'll just back it up. Okay. So Nike here is in a 30-minute squeeze. We've got this, wedge forming here on this spike up. Everybody can see that, right? We're definitely in a trend. We have a pattern. And at this point, we have a squeeze. And our little fourth step, if we can, is we'd like momentum to change to yellow here to give us some confirmation. So as this sits right here, let's set up a trade on it. And in the meantime, if you've done this before, search around and see if you can find a 30-minute or a 78-minute chart, BITO maybe. I'll check that out in a minute, that we can use as a live example. But I'm going to set up a trade here using risk reward parameters, right? So I'm going to pick this up. Let's say we're sitting here at 106.91, right? And I want to pick this trade up because I like this pattern. I think it's going to resolve itself to the upside, and I need a good risk reward level. Okay. So I'm going to come in here. I'm going to look at this volume profile node over here on the right, on the left, sorry. And that's kind of like, this is sort of my middle section that I need to get up and over. This is where most of the people are. I'm going to set a stop loss down here below this low right here. Okay, so I'm going to do that in yellow. That's where the pattern breaks down for me, is below that spike low. And then I'm going to look for, and we use this tool here to measure this pullback. And then we want our 1272 extension. If you could see that, if we get a little bit closer, right? We're looking for a break of the high, and then the 1272 extension is generally our target. Lately, it's been, the spike high, because we just really haven't been getting a lot of things that are following through. I don't know what that is that just popped out there. There we go. So we'll put a line in up there. I'll make that line green since that's our target line. Okay. So now we're looking at a stop loss below the yellow line, an entry right here, and an exit profit target there. So what we can do is we can do the math in our head, or if we have the long position functionality, we can put this in right here and say, okay, this is my stop level. Okay. I am risking 50 cents, 51 cents, let's say, for a target of $1.07. So that's essentially a 2-to-1 risk reward, right? Can we see that? Oh, perfect. ANET 78. All right, we'll take a look at that in a minute. So if I'm getting into this right here, I'm risking 50 cents to make $1. Okay, and if I'm buying shares, that's really straight up. Right? If I'm buying shares here, I'm risking 50 cents to make $1. Now, if I'm buying options, this is a 30-minute chart. It's a Tuesday. So I would probably go out, if I was in this morning, I would probably, these would be same week options. They'd be this week's expiring options. You can go out a little bit further if you want more time. You're going to pay up a little bit for those, obviously, because you're buying more time. But this is a valid trade. We have a 2-to-1 risk reward. Now, the issue is we have to, and we talked about this yesterday, when we are developing good risk reward parameters. So here's my reward. Here's my risk. Okay. And just for fun's sake, we'll just take this out, right? So you can see that this is larger than this. And all your trades should have these risks. this risk reward or better. 2-to-1, 3-to-1, right? So then if your trade, and I think Donnie was talking about this earlier, D-Man, if you're a 50% trader, meaning 50% win rate, and you have a very good, we call this RR, risk reward ratio, right? Then at a 50% win rate, just half. It's almost like throwing a dart at a dartboard, right? You're going to be a profitable trader. And if you're using an edge that is proven, then you can be you let's say you're a 75% win rate. Now you're really talking. Now you really start to grow exponentially. All right? But here's the key. Most new traders, one, won't do what we just did here. Most new traders will hear, so-and-so guru is getting into Nike right here, and they'll just go and buy Nike. And they won't draw up the chart. They won't have their stop level. They won't have their profit target. They won't understand that that this is 50 cents to $1, roughly, right? They won't know that, and they won't have a plan written up on their chart. You can even, we've all seen a couple of us do this. You can come in here and you can go, Nike 30-minute TTM squeeze or TPS player, whatever you want to call it. Entry 106.92, right? Stop 106.40, etc., 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 right? And then you start your if-then statements. So if Nike comes down into this level, right, and doesn't break, and I am not at 100% of my position. So here's another thing to consider. If I'm going to take $1,000 in Nike, and that's my max trade, right? And then my max trade, then I maybe want to take a 50% position here, or 75% position here, and leave a little room for this to come down and add off of lower support. If I liked Nike prior to this and I got a pullback to this support level, I would want to be able to add here and be full position. Why would I want to be full position at my support level? Why is it better to be full position there and not full position here at our previous entry? Why would we want to be, let's say, 50% here, right? And 100% here? Yeah, John, got it. Bingo. So let me get some of these drawings off of here. It gets a little crazy. I want to be 100% of not of my account, but of my maximum trade way down here. So now if my profit target, because this is my edge, my profit target is still here, now my risk reward is, what does it say here? Is, 10-to-1. Because if I'm adding down here, or I'm taking a position here, let's say I like this and I'm just watching it, and I take my position down here, as it drifts down here. Now my risk reward is 10 to 1 because I'm risking 30 cents or something. Does that make sense? But here's the key. Here's the most important piece of this whole thing. Well, one is have a trade plan. Have an if this comes to here, I'm buying more, or I'm waiting until this comes to here to enter. And my profit target is here. And my risk reward ratio is here. And if it breaks this level, I'm out. And if it hits this level, I'm taking profits or even partial profits. But if you don't have that trade plan, you are not prepared for your trade mentally, even if it's somebody else's recommendation. So if Nate Bear comes on and says, I'm buying Nike on the 30-minute chart, I am personally opening up Nike and looking at it and making sure that it fits my parameters. If it doesn't, I'm not taking it. Even though our main guru, the main guy, says he's getting into it. It has to fit my risk reward parameters. And I have to set a stop based on where I think the chart breaks down. Okay? So that's how you set up a good risk reward on a trade. And a 30-minute isn't going to give you a massive risk reward, right? So let's watch this thing play out. Okay, we spike up just today, right? Let's say we bought yesterday, we spike up today, taking profits here. Okay, and I'll show you that Fibonacci levels, right? We did these Fibonacci levels here. When we're really in a trend market, your first profit target is at this 1272 extension. And then you can leave a trailer on for this 1618 extension up here. Whoops, I inverted the chart. Okay, so when we're back to a really trend market, profit target number 1 is there. Profit target number 2 is there. So you'd be all out of Nike according to your edge. Does that make sense? Now, the one most important caveat to all of this, and we talked about this a little yesterday, when we are back here, whoops, let me go like this. Okay, we're back here. We like this trade. We're going to take it. Here's our risk reward. How many of you will get into this trade and it does this, then it does this, then it breaks this level, and you're like, oh crap, it's broken the level that I thought I should have as a stop. Let me ask you this. Let me back up. Type a 3 in chat if you generally do not put a stop on your chart. When you take a trade, do you put a stop level? If you do not put a stop level on your chart, put a 3. Okay. So for everyone that's typing in a 3, this is super common, by the way. Super common. If you're typing in a 3, my recommendation is change that behavior, because this is going to be you. And Sugar Dog, a mental stop is fine. Like, I'm not going to put a hard stop in at 106.40, but I'm going to stop out below 106.40. And I want this on my chart so that I know when we've crossed under 106.40. So, to all of you that just typed a 3 in here, when you get in a trade and it does this, and then it does this, and then it does this, how do you know when it's time to get out? You spend all your mental capital waiting and waiting and waiting and hoping that it comes back up to here, don't you? And sometimes it never does. And that option expires at 0. Or you're in for next week and it takes so long to get back up here, you're back up here and your option is still at near 0. Okay? Right, when your crying is at its worst. So here's my challenge to everyone. That when you take a trade, whether it's your trade, Nate's trade, my trade, D-Man's trade, that you come in and you understand 3 important things. Yeah, hopium. Hopium is the worst. You understand 3 important things. 1, stop level. Where does this trade break down? 2, this is really cumbersome. Profit. Where is my profit target? And when will I take profit off? So number 1 is stop. Where's my stop level? Number 2 is where is my take profit level? And number 3 is what is my risk reward? Okay, that's challenge number 1. I know I'm doing it with a mouse and I'm doing it with, it's actually not even a mouse, it's a trackpad. So yeah, it's pretty bad. I get it. I need to get a pen, a proper pen. Okay, so my challenge to you is every trade you get in, you need a stop, you need a profit target, and you need a risk reward that fits your parameters. Okay? That's challenge number 1. Challenge number 2, and this is going to be the hardest for everyone, and I still struggle with it. From time to time, when this closes, so this is a 30-minute chart. So if it just spiked through and came back up, and our candle looked like that on the 30-minute chart, that's not a stop out. I have to wait for the 30-minute candle to close. But as soon as your trade breaks down, cut it and move on. Okay, that's the mental part of being a trader. Cut it, be cold, it broke down, write in your journal, who knows? Maybe you get better at putting stops, stop levels in based on the chart and based on VP. Maybe that needs work. Or maybe you keep trying to play TPS to the upside in a downtrending market or vice versa. Right? But you have to honor your stop. Otherwise, your risk reward goes to hell. And then what you're really doing is you are let's say you're good, right? Let's say you find some good trades and you're a 65% win rate trader. Except you let your losers, your true risk reward is 1 to 3. You could have a 75% win rate and you're still a losing trader. Yeah, SoCal, that's what I do for stops. If I'm playing the 30-minute chart, I stop out based on the 30-minute chart. And that's a candle close. $365. I mean, you can do it that way, but depending on the size of your trade, depending on whether you're using options, depending on where you get into a trade and where the chart breaks down, like depending on how much you bought or what kind of options you bought, you could get a 30% stop loss here and the chart still hasn't broken down, and you'll take your stop and then this thing will bounce and go, right? You need to understand charts. You need to understand where levels are, support and resistance levels. Yep, Chandler, that's very, 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 very common. Your two losers wipe out your eight winners. I can't tell you. I mean, I am telling you, but I can't express how much that is the entire game. Learning how to trade is actually fairly easy. Finding setups, marking up your chart, pushing the buy button. It's actually easy. And it's actually easy to make money in the market. One off, two off. What's harder, the game is really not to lose money. Sarah, I'm glad you're loving the scans. That's great. The game is really not to lose money. Manage your losses, right? And let your winners ride. Because so many of us will be like, oh, there's my profit target up there at $1. This comes here, it comes here, it comes here. Oh, God, I have, $300 profit in this trade. I don't want it to roll over because I've seen it roll over and I have PTSD when that happens. So I'm going to take my $300 here, right? When most of your trades have a $350 stop loss, which you don't always honor. And this should have been a $500 winner. I'm just picking numbers randomly, right? But you took it off at $300, and then your next couple trades you have a $350 stop loss, but you let run to $700. Now instead of taking a $500 trade, you're taking a $300 trade, and you're taking a $700 loss on other trades, right? You see how that happens, and we get excited, and our PTSD kicks in when we start getting into profits, and we take profits too early. And yeah, sometimes it rolls over. Yes. Okay, and in this market, you kind of have to take profits a little bit earlier, right? But that means you have to tighten up your risk reward down here. You always want to make sure that risk reward is balanced in your favor. Okay, real quick, we're going to look at some charts, and then I gotta jump off. So let's do that. Where were we here? Back up above all the threes. So if you typed a 3 in chat earlier and you are committed to making a trade plan before you put on any trade on your chart, type a 1 in chat. ANET's interesting. What was the other one? ANET and RTX. Good. And now, at least for all of you who typed a 1 in chat, you'll have a level on your chart. And here's what I do. If you use TradingView, this really helps because, it's just a line on a chart. No, go into the gear, go into text, and write in stop level so you can see it. And you can even do your other, line and write in profit target. So if you typed a 1 in, you've committed to at least putting a stop level line on your charts. Okay? And that is an awesome first step. If you're already there, and you are committed to cutting a trade when it breaks your stop level, put a 2 in chat. And if you've just typed a 1 and you're committing to do both, type a 12, right? And you're the only one that can hold yourself accountable here. So if you come in and you say, I committed to both putting a stop on my chart and honoring my stop, and I just failed. If you have a growth mindset, that's something you can put in chat. And everybody else in here who's trying to do the same thing can go, hey, it's okay. I did it last week. I'm trying to do better, right? I'm trying to, yeah, it's too many numbers. I'm sorry, Todd. I'm trying to, I failed. I was committed to doing this. I did it, but my brain, my psychology wouldn't let me stop out. So I took a larger loss than I should, and I'm back to being committed, right? And other people in this room will go, "Yo, I just did that yesterday. Like, no harm, no foul. Just get back on the program of doing it right." I'm not loving these wicks and this double top on ANET. It isn't a nice squeeze, but it's not my favorite. And then let's see, RTX also 78. That one I like better. Interesting. Yeah, right here at this VP level. Let's see what the daily looks like. I don't know that I like the daily. I don't like the daily. On this one, because this is such a kind of clear level. We are above that. I don't know. I mean, that's just for my eye. You're going to see all of these people here are going to cause a boatload of resistance. However, that being said, the move up to that level is pretty significant from 82 to 85. It's in a good buy spot if you like it. So if I were setting this up, the chart to me breaks down right there. I'll make that one yellow. Right? So let's get a little closer. Whoops. I need that. Sorry, there we go. So we're in a nice pattern. Chart breaks down at this value area low here. We're taking a position at, let's make that red, right at point of control. And then if we're going to use our fib extension, that's our pullback. Let's put our target at the 1272 here. So here's what I would do. Profit target 1. So this would be stop level. Whoops. This would be profit 1. Whoops. 1. And then that level, that resistance level that I had marked on the daily chart, I would make profit 2. And profit 2 is not half of your trade. It's a trailer. So then we go here to our long position, take a position there. There's our stop out level. There's our first profit level. What are we risking? 40 cents for almost $2 of upside. So 4 to 1 almost. Yeah, and SoCal Traders recommending doing like a bracket order and just putting the trade on and letting it go. Which we've talked about before, but I don't have time to go into right now. So this is a good risk reward trade to the long side. We're in a 78 minute, so I'd go out at the very least the next week or the week after from a time perspective, because you have to factor in theta decay on your options, right? So then that's your trade plan if you were going to take this. So you've got $2 of upside and 40 cents of downside. And I base those levels on both the chart and this volume profile. This is a value area low. This is a point of control. Does anybody have any questions on that? But now you have to honor all of these things that you just put in place. That's why they're on the chart. You can continue to extend this out. You can leave that on the chart to remind yourself. The value area low, you see this node here? Right? This whole node, that's the bottom of it. And then we have another little node here, but not a very big one. This is some air in between with my good drawing skills, right? So a value area low is going to act as support, but below that, we're going to fall. And if we, make this chart larger, where's our next major point of support? Not down until here. This group of people here. Right? So I feel like if this gets below that, it's probably falling into this level here. So, and then there's a value area high, kind of in this range here. But these are volume profile nodes: value area high, value area low, point of control. This is where a lot of trading has happened right through here. So there you go. That's your trade plan, and that's how to mark up your chart so that you can honor your trade plan. And make sure you have a good risk-reward ratio to your trade before ever putting it on. I will post this recording on YouTube. And mine is, I'll put it in chat here. I'll post it up after we're done here. Okay, that's it for me. Thank you all. I'll leave my screen up until, I'm not sure if D-Man wants to come back on in a little bit. Nate Bear should be on around 3 o'clock for the close, I think. I know he's got some family stuff going on, so he may not. I'm not sure. But I hope this was helpful, and I'll be in chat today. Talk to y'all later.